Hello guys, what's going on? What's happening? Welcome to another video of the Stocks Doctor. And today we're discussing really quick CCIV stock performance, especially after hours with this finally expected announcement of the merger with Lucid Motors. Well, it finally happened. A lot of people got really happy, a lot of hype, but then boom, what happened? It did really bad, unfortunately, all the way down from half a day of $60 to $62.40 all the way down to $42.81. It's unfortunate. Personally, I feel really bad for all the people that were chasing after the $40, the $45, even the $60 level. I know there's a lot of people trapped there. My best advice would be, or to cut your losses right away and try to make it up tomorrow and the rest of the week, or just hold and become long and wait to be rescued, because definitely it'll recover. It will definitely go back up again, but you have to be patient. If your account is big, if you have enough money to compensate for that, if you can hedge, if you can take another positions and recover the losses, excellent. That'll be a great opportunity. If you feel that you cannot hold for more than, I don't know, 1 month, 2 months, we don't know how long it's gonna take, and you feel like maybe you can close the position, you can take the loss and maybe take another better trade and recover the losses with the money that you still have left on your account, then do it, please. That's part of the learning process. We've been in that position at some point or another. We all been in that wrong side of the trade at some point or another. So please don't feel discouraged. Forget about all these people mocking you because you didn't take your profits, because you jumped late on the trade. That's alright. That's part of the learning process. We all been there. It'll be fine, trust me. Something important to mention is for all the folks that were in since the $18 levels and the $24, $25, $28 levels. Many of them, I feel like they were also mocking all these chasers that jumped at the end. It's not their fault. Something important to mention about the stock market is like nobody knows the future. Nobody knows what's gonna happen, especially with many of these SPACs. Many of them have a history of dipping after the merger is announced, after going basically in a way public, because there's a lot of uncertainty around them. So that's also another important point to mention about this is that you always have to, or it's recommended for you to hedge your position. For example, in this case, I know many of you had long call options for March 19 expiration, March 19 or April 16, and even many of you, which I like to call them true longs, had positions until like 2022 January 2022, and so on and so forth. For those of you that had, for example, positions for April, for June, for 2022, pretty sure many of them hedged their position with a close expiration put. This was easier to do last week. Why? Because we had those puts, or those calls and puts that were expiring on last Friday, which it was a really important expiration date as well. Now, most of the calls and most of the puts, you have to wait until the 19th, so it's really difficult to hedge. I know that. But you can take, for example, another position on VIX. You can take another position on another index that is bearish against the SPY, and in that way at least you can hedge a little bit your account. Remember, the most important thing here is to protect your account. Regarding the technical side of the stock, we have the CCIV stock open at $62.97 with a daily range between $56 and $63.20. The 52-week range goes between $9.60 and $64.86. When we go to the chart, it's really important to mention, guys, that the Churchill Capital stock has resistance on the daily at $62.40 and also has support at $42.81. The pivot point is at $56.45. So let's keep an eye on this for tomorrow, because definitely I feel like it'll go back up it will have a reversal probably during pre-market hours. So let's hope for the stock to go back up, especially for those of you that were in after the 45 or after the $50 level. Especially if we notice that the stock is over the $56.45, that pivot point is really important, because if it goes up during pre-market, if it's up before the bell rings at market open, it's a really good chance, a really good probability that the stock will go back up. In the same way, if the pivot point, remember the pivot point is at $56.45, if the stock open under that level and doesn't manage to go up or over that level before market opens, be careful, because it might represent that it will go on a downtrend. I know we've been having a really difficult week, really difficult last couple of days on the trading world. It's really easy to trade when we are in a bullish market. It's like they say, everybody's a guru when you are in a bullish market. But now that everything is going down, everything is flat, it's really difficult to trade, and a lot of people are getting burned. Please be patient, wait for the right opportunity. See it on your hands if you have to. Do not risk your account, protect your account. Stay in cash, taking no position. Sometimes it's also a position. So be patient, the opportunity will come. So let's keep an eye on this movement. Let's see what's going to happen tomorrow in pre-market hours, and trade carefully, guys. Protect your account, take profit, and don't take a position that you can afford to lose. So let's keep an eye on this and wait for the best. Thanks for watching, guys. See you again next time.